stand up.
What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having a great start to your week. Now, obviously, we did have a pretty ugly open for the stock markets. Bitcoin already has been going in this downwards trend. Now, I did show you guys we perfectly hit the resistance yesterday. If you were looking to short Bitcoin, that would have technically been the place to do it. But you can see either way that Bitcoin is essentially just forming this falling wedge. Now, we do know that falling wedge patterns are typically bullish. However, due to the fact that we did just have this pattern forming after this massive drop, we might need to reevaluate the situation. Now, there were a lot of people yesterday very concerned, whether or not I was becoming a Bitcoin bear or something like that. And I think in this video, we need to clarify exactly what I'm talking about when we're discussing what's happening right now with Bitcoin, because there is something right now that is in fact holding down the price of Bitcoin. Specifically, you can call it manipulation, whatever you want. We're going to go into that in just a bit, but I will show you what I am anticipating Bitcoin to do, why I still do believe in these lengthening cycles. And, for a lot of people that just got into crypto and they might have bought around this top area, then, this kind of might suck. But for those that understand the long-term process, the long-term vision, and the fundamentals for Bitcoin, you truly understand the opportunities that lie ahead. So in today's video, we're going to talk about, whether or not we should just discard the stock to flow model. Is plan B completely wrong? Are we going into a Bitcoin bear market? Or realistically, what should we expect in the short term? So that's what I want to go over today. And I will talk about what specifically is suppressing the price of Bitcoin. But there's one important thing you must understand, and that is the Bitcoin price is a lie. Now, if you don't know what I mean, stick around and we're going to explain exactly why that is. So if this is your first time checking out the CryptoZombie channel, thank you so much. We are going to have a fun video today. Stick around. We're going to focus a little bit more on charts because right now there is something extremely critical happening for Bitcoin. Now, you can see the significance, and I cleaned up this chart. I got rid of most of my levels. I tried to make this as clean as possible so you can understand why we are currently at a very critical level. You could see right here, we had this point of contact where Bitcoin had the $42,000 top and we pulled back. Now, if we fast forward all the way to when we did have the bounce, right, from the reaccumulation, right here, right in this area, it was acting as the support, then it was acting again as the resistance. Now, currently, it is acting as support, but how long will this level hold? Because if this level does not hold and we do not get a bounce from this level, then we are in fact going to revisit the $41,000 level, okay? Now, at that point, I would say that would be an incredible opportunity short term to potentially put in a Bitcoin long. I'll actually probably be putting in a long there myself. And if you want to know how to trade Bitcoin long or short, I definitely don't recommend it for beginners, but watch the tutorial popping above and also just subscribe to this channel. I always go over my critical levels, but this is why I'm saying right now, of course, anywhere in this blue zone is kind of no man's land. But the other thing that we need to also consider is that Bitcoin essentially has just been bouncing around these levels since all the way back here. Basically, if we go back to February 8th, of 2020, February 8th at the beginning of this year, Bitcoin has pretty much just been sort of range bound. I mean, you could see right here, it's been about 318 days and, Bitcoin was already at this price way back in February of the beginning of this year. So this has basically been a somewhat boring year for Bitcoin, right? A lot of investors are like, well, what is it doing? It's just going up. It's kind of coming back down. Well, as I've been saying on this channel, we are experiencing lengthening cycles for Bitcoin. This isn't some kind of a theory, that we're just coming up with out of thin air. This is something that is truly happening right now because we have the institutional adoption. We have the big players coming into crypto. It's not just the retail speculating, betting on these 5, 10%, whatever moves. No, these guys are in for the long haul, and that's why the game has changed. And I don't mean to beat a dead horse, but I'm sorry, the 4-year cycle just doesn't matter as much as it used to. And I understand that some people in the comments, and I do respect your opinion, you disagree with me, but I'm just saying it's not as significant when you're talking about the amount of Bitcoin being distributed. It just doesn't matter as much going from 50 to 25 to 12. Now we're just going from 6 to 3 to 1.5. Also, 90% of all the Bitcoin came out in the past 12 years, and it's going to take the next 120 or I think 140 years for the remaining 10% to come out. So Bitcoin is already extremely scarce. So that is a good thing. That is a good thing for Bitcoin. But as I said, guys, we are at this critical level. Now, having a look right here, you can see that we have fallen below the 200 daily moving average. Now, does this have as much weight for something like Bitcoin? Considering Bitcoin trades over the weekend, right? And also it's a very young asset. Well, we do have to take that with a grain of salt, but having a look right here, you can see that there are these extremely important levels. The first one being right here, where we had obviously the same resistance. Now this is more of a linear pattern. It's kind of a spider line, but you can see the resistance, you can see the support there. And when we fell right here, okay, that is exactly where Bitcoin had the bounce. So I do believe that what is happening right now is Bitcoin is slowly kind of just boring the average retail investor. We are building the base so that we can move higher, but it would not be out of the cards to see us come down and retest the legacy trend line. Now, the reason that this gets kind of annoying is because you gotta just sit here and just go day by day by day, right? I mean, every single one of these candles is another day, 1 day, 2 days, 3 days, right? Now we're talking almost a year and we're still consolidating in this same pattern, stuck between the top, stuck between the bottom. But this right here, I'm going to scribble on this chart all day, okay? We are building a base, my friend. That is what we are doing, right? So having a look, if this was to fall down, then obviously you could see the legacy support, which started right back here. When we came down from the big dump down to the bottom of the reaccumulation, we also had the bounce there. So I'm not saying that we're going to go straight down. No, I don't think that's actually what's going to happen. I think we may come down, retest 42, probably come up, hit some resistance again around 47, and then maybe come down and retest this level where at that point it would be much higher, right? And that would be sitting at around the 40,000. Actually, it would be right around the right around the $40,000 level, right? But I mean, that's kind of like that's kind of the bearish case, right? I mean, we have to keep our eyes on what is happening right now. Now, Peter Brandt, he actually had this chart on his trading view, and he said that the reason that he doesn't think that the dump is over yet is because we haven't seen enough volume. You could see on a lot of these really big, moves, it was accompanied by a lot of volume right here, right? We have a lot of volume here. We have a lot of volume here. We even have a lot of volume right here, but we haven't really seemed to see any significant volume in this move yet. So this could signal essentially that the price was looking to fall. Now, as I told you guys though, ultimately when you look at the log chart, Bitcoin is just going up and to the right. That's what it does, right? It does it for a lot of reasons. It does it because of inflation, right? We know that the dollar is just going to continue to lose value regardless of the Fed's hawkish stance. But having a look at the fact that we do tend to come down and retest the 1.618, I have marked all these levels right here with the green lines. And, if we zoom in right here, let me actually go back to the auto so we can zoom in. Actually, my line was a little bit off. Sorry about that, guys. Let me just move this up a bit right around there. You could see that, there's nothing really in the middle of this level right here, the 2.618 and the 1.618, right? So obviously, this area right in here is kind of no man's land for Bitcoin. You can see there's not really any significant reason for Bitcoin to really trade in this area. And you could see that we are sitting right here at the end of this significant level, right? You can just see it with your eyes where the box changes colors. So that's why I said it would not be out of the cards for Bitcoin to come back down to these levels. In fact, I showed you guys on the S&P chart that, let me go to the weekly so we can see it a little better. We actually did have something very similar in this chart as well. Right here. I mean, look right here, guys. Very, very similar. Look, where we had the S&P, we had the S&P come up here, and then it came down, and then it went back up again, very similar to what Bitcoin is doing, and then we came back down again, and you could see the significance of those support levels, right? So we had this right here, and then we had this this down here, right? So we were bouncing around in this area. And if you have a look at what Bitcoin is doing, we're essentially doing the same thing where we're trying to bounce around these two areas, right? So, I mean, I'm not bearish. I'm just saying that we need Bitcoin to build the structure. And right here would be the strongest base for Bitcoin. Not only would we have a lot of accumulation here, a lot of accumulation here, but we also would have the 1.618, which is why I say that it's not impossible for Bitcoin to retest 30K. But once we get to those levels, if we get to those levels, I'm not going to make a prediction because honestly, I don't know. Nobody knows. We're all just trying to make educated guesses. But if I had to make an educated guess based on the current market situation, based on the fact that we do have, currently the S&P essentially pushing right here on the bottom of the support. And if it falls out of this support, it's going to be pretty bad for the traditional markets. So would it be possible for Bitcoin to sort of do what we saw back there in the S&P? Absolutely. And I think that we would have massive base rebuilt right here. Not to say that we couldn't wick down to like 28 or something because there's always these cascading liquidations that happen. But ultimately, I think what would happen at that point is all these speculators, these new people that got into crypto this year, they think they're just going to make, millions of dollars overnight, are going to be very discouraged. They're not going to have the patience to hold it out. And then I believe what's going to happen is something like this. And this is a very rough drawing. I think we're going to have something like this where we come back here, maybe spook investors out, where we kind of dance around that area, have a little bit of a fake out dip, maybe even down to like 25,000. And I'm talking like super quick, like, a daily candle just to freak people out. And then I think we're going to do something like this, guys. I think we're going to see some massive moves. And as soon as we break out of this level right here, the 4.236, essentially like we always do, okay? We always break out of it like we did down here when Bitcoin was struggling at around $4,500 and then boom, we skyrocketed. I think that's exactly what we're going to see. And I think then, then we could just make this chart smaller and, then you're going to have something crazy where Bitcoin, comes up to these crazy levels and then crashes another, 80% or something, even though we hit $500,000 and then all of a sudden it dies again. And then, we just continue again. This is what Bitcoin does, guys. This is what Bitcoin does. But on the daily chart, it is quite boring, right? Now, you have to keep in mind that the crypto market cap grew almost threefold in 2021 despite a turbulent year. And I need a drink of water. Just give me a second. I just spilled some on myself. Thank you. So you can see right here, guys, the crypto market cap grew almost threefold in 2021 despite a turbulent year. Now, one thing we pointed out is that the dollar index, okay, has been going up. Now, right here, we had some critical resistance. We did dance around this. You could see we didn't break right out of it. Once we retested it as support, the dollar broke up. And right here, we are looking to retest some resistance as well. Now, here's the funny part, right? So in the short term, people are looking at this chart and they're saying, well, if the dollar's getting stronger, that's not good for things like Bitcoin or gold or stocks or whatever, anything else. You should just be selling and you should be sitting in the dollar right now. But the funny thing is, when you actually zoom out and have a look at this chart, which you can see right here, I don't have any data before this, but this is November of 1985 is essentially when this chart started. I mean, guys, the dollar just loses value. I mean, yeah, there's a little bit of hope rally right here back in 2001, right? There was a little bit of excitement and then we fell again. And you can really just see that ultimately the dollar is just trending downwards in this giant channel where we just keep going lower and lower and lower. So, I mean, yeah, short term could be a little bit scary. If the dollar does continue to strengthen a little bit, if the Fed does go forward with their hawkish stance, but ultimately long term, Bitcoin will survive and Bitcoin will continue to go up. Now, this is why the Bitcoin price is lying, or the Bitcoin price is a lie. This was Mark Yusko. Now, he is over from Morgan Creek, and he had an interview. It was over an hour and a half long, so this is essentially just the highlights from that interview. So he says, it's interesting that in the short run, when prices fall, as they have in the last few weeks, people start to get a little antsy and start to question these long-term trends and fundamentals, but he says price is a liar. If you look at US stocks, we're having new all-time highs. That's because we denominate in a depreciating asset, the dollar. The dollar continues to depreciate, therefore, by default, everything else is propped up against it, right? So he goes on to say, the S&P 500 has soared more than 98% over the past 5 years. However, last month, it took just 2.5 ounces of gold to buy the index, the same as it did more than 16 years earlier in October of 2005. That price was unchanged from June 1997, which was 24 years ago. Now, if Bitcoin is supposed to be digital gold, well, in contrast, Bitcoin currently trading at a value worth around 26.97 ounces of gold has skyrocketed more than 60-fold in that same 5 years to date. So when you look at what Bitcoin is doing compared to not the dollar, because the dollar's falling anyway, but compared to something like gold, which is sort of Bitcoin's competitor, right, when it comes to stores of value, then if you ignore the day-to-day movement, it's very obvious and very apparent that Bitcoin will continue to be the store of value. Now, one thing that we did fear, and it happened, and we pointed this out, was when we did have this ProShares Bitcoin Strategy ETF launching. You can see right here the launch date, right? This is the first date that it launched, was on October 19th. Now, interestingly, if we actually go back to the Bitcoin chart right here, and we look at October 19th, let me show you exactly what day that was. These are the weekly charts. Sorry, guys. But anyway, close enough. Right here. Right here. So, I mean, it was right here, and then we put in the first high for Bitcoin, and then, you know, there was this little bit of rounded top, people were excited, and then we started falling. And the reason is because this right here is not a physically settled ETF, right? This is just a futures-based ETF. And the problem with this is it does the same thing that they did to gold, is they're creating what's sort of referred to as paper Bitcoin, right? So that creates a problem because it sort of inflates the Bitcoin on paper and it doesn't force them to actually hold the underlying Bitcoin. But keep in mind, guys, this is only US based. Now, the thing, going back to what Mark Yusko said, Switzerland has actual spot-based Bitcoin ETFs. And he says that's increasing demand for Bitcoin as money flows into the ETF. Canada has that as well. There's one about to launch in Australia. That is positive for the ecosystem. That is increasing demand for physical Bitcoin, and it increases participation, it increases the network effect, and it gives us a rise to this parabolic curve. He goes into a little bit of math right here, but whatever. Excluding the math, he says it is such a globalized world. Again, American exceptionalism. You know, we think that in America, we drive everything in the world and Bitcoin, but really, he says it only represents about 25% of the market. So yes, the US has a massive influence in the markets, you know, especially in Bitcoin, but he's saying it's only about 25%. So really, everyone else representing 75% shows that there is still a lot more activity happening in these other markets, and the fact that they are choosing to go with the physically settled Bitcoin ETFs is really increasing the demand. Now, finally, he talks about not following the money, right? So what does this mean? Well, he talks about the stock to flow model, and he mentions that, you know, everyone is saying that Plan B, you know, messed up, right? He said we were going to hit $100,000 by the end of November, and we didn't hit that. And he was also saying it was supposed to be $135,000 by the end of this year. And yeah, clearly it looks like that's not going to happen either, right? But he says, you know, people are saying, so does that mean that the model is broken? And he says, no, it just means that price is a liar. The model is still accurate. It just means now that the price is undervalued relative to the value. He says that model, meaning the stock to flow, is about 95% to 96% correlated. The most highly correlated is actually the value of Bitcoin to gold. However, he says, how many ounces of gold does it take to buy Bitcoin? Now that's almost 99% correlated. So essentially the takeaway is that, when we're comparing it to things, like the dollar, which is rising short term, they're taking their hawkish stance. But, like I said, zoom out, and if we go back dating this all the way to, and this is just like when we actually have data on the dollar. The dollar clearly has been in a decline since it was created in the early 1900s. The Fed was created, right? Then in the 70s, we went off the gold standard. But I mean, look at this, guys. I mean, yeah, it gets exciting, but ultimately, what is the dollar doing? It's just putting in lower high after lower high and lower low after lower low. This is an extremely bearish chart, my friends. This does not look good for the dollar. Lower highs and lower lows, okay? So short term, it could get a little crazy. We could revisit 30K. And I know that I just bought some Bitcoin the other day at around 47, and maybe some people are laughing at me, calling me stupid for buying at 47. But guys, when you understand the long-term prospects of Bitcoin, $47,000 in 5 years is going to be an absolute joke when you know what the dollar is going to do over time, and you realize that people are not jumping into gold the way that they used to, because I just showed you back here that if you compare the correlation of being able to purchase the S&P via Bitcoin versus gold is basically exactly where it was, back then in relationship to the S&P, whereas Bitcoin is clearly a lot higher, right? So it's all about your perspective. It's all about how you denominate it, and we know that inflation it's not going away. It's just not going away, guys. They're not going to solve it. The only way that they could truly solve it would be essentially to, kind of let it all burn ultimately. And I don't think the US would let that happen. I don't think they would really let it sort of burn down and then let it build back up, because their ego is just simply too big. So that being said, guys, let's talk super quick about Ethereum. I think Ethereum is actually looking healthier than Bitcoin. Ethereum is, in fact, forming a falling wedge, but it's forming a falling wedge out of an uptrend, right? We have an uptrend, falling wedge, uptrend, falling wedge, uptrend, falling wedge, and we are on critical support right now. So, obviously, if people get spooked all around, Bitcoin falls, stocks fall, then there always is a chance that Ethereum does fall. But if there's even a remote rally, for any of these, I do think that Ethereum is going to bounce here. And I think Ethereum could actually get back over 4,000, probably around $4,200. So I would put, if you are looking to trade this, the safest area right now is around 3,691. I would definitely put a stop loss around 3,631. I know that that's very close, but the only reason I say that is because if we fall below that, then we're definitely going to go down to 3,379. So pause the video, rewind if you want to get those numbers again. Like I said, that is if you are looking to trade. There's over $8,000 in bonuses. You can trade it on Femex, you can trade it on Bybit, and personally, I think if we fall down to that level, I'm going to be taking that trade. Not going to go crazy high leverage, maybe something like 5, but I am going to take that trade because I would expect Ethereum to bounce. Ethereum has shown a lot more strength than Bitcoin, and you can see that we are consolidating against the Ethereum to Bitcoin comparative, but I am anticipating an Ethereum breakout compared to Bitcoin, and I do think that Ethereum will ultimately outpace Bitcoin this cycle. Just being honest, guys. But I still hold more Bitcoin than I do Ethereum because, that's just how I want to position my portfolio. Now, ending on some brighter news, we do have the United Arab Emirates continuing to emerge as one of the world's biggest cryptocurrency-friendly jurisdictions, and now they have the Dubai World Trade Center, which is a government-owned event and exhibition venue in Dubai, saying that they will become a comprehensive zone and regulator of cryptocurrencies, products, operators, and exchanges. So congratulations to Dubai for continuing to be forward-thinking for Bitcoin and cryptocurrencies. And this probably explains why a lot of the people that I know that do crypto are moving to Dubai. Personally, Dubai's nice. It's a little too hot for me. Although in all fairness, it's starting to get a little too cold here in the States right now where I am. So, maybe I could do some timeshare. Maybe I'll just go over there once in a while. Maybe I'll spend the winter months in Dubai. And I did want to end on the fact that we do have e-commerce giant Shopify enabling merchants to mint and sell NFTs on their platform. So I do believe that ultimately everything will be an NFT. Birth certificates, driver's licenses, everything. It's not just, buying Bored Apes on their yacht clubs, whatever. I think it's going to be a lot bigger than that personally. And as I've been saying, guys, I do still believe that bull market or bear market, there is still development happening right now in the crypto space. And, maybe that was a little bit of a misconception when I was trying to explain that. When speaking about bear markets, what you realize, not saying that we're in a bear market, although I do believe that we are in a downtrend. We're definitely in a bearish trend on the daily. Weekly still looks pretty good for Bitcoin. Daily doesn't look too good, but ultimately they're not going to stop building, right? They're building these DeFi platforms. They're building these games. They are growing these ecosystems in the metaverse with the NFTs, and you just kind of got to get on board with it. Whether or not you like this, whether or not you think that this is the future, you completely disagree, you're a Bitcoin maximalist, really doesn't matter, because the truth is it's happening anyway. Blockchain is coming to the masses. NFTs are going to be everywhere. The metaverse is going to be a thing. It's starting to be a thing right now. And, for those traditional finance people that still can't accept the fact that Bitcoin is the new digital gold, well, get on the train or miss the train, right? So that's basically it for me today, guys. Thank you so much for coming back to the channel. You guys rock. You're the reason that I make these videos. And of course, if you have not got subscribed to the CryptoZombie channel, what are you waiting for? We make these videos in bull markets and bear markets and kangaroo markets and crab markets and every kind of market that you like. And of course, if you are looking to trade Bitcoin, if you are feeling quite bearish, you can short Bitcoin. I don't like shorting Bitcoin. It's not one of my favorite things to do. I prefer to long the supports, but that's my strategy. I go over both of those strategies in the videos popping up right here. And if you are interested in learning how to trade Bitcoin profitably and safely, then make sure that you watch these videos right now. And that's it for me, guys. I'm done. My name is K-Dub. This is CryptoZombie. Until next time, stay crypto. And of course, peace out.